Siddhartha, thank you very much indeed for joining us. Well, what are you looking at here? We had that 50 basis point move upwards in May. Do we get more of the same?
Well, I don't really expect so. I think the inflation is a pretty alarmingly high range, and the RBI would have to stay cautious. But at the same time, the kind of hawkishness in terms of both tone and action they had demonstrated in the last policy in May, it's pretty difficult to repeat policy after policy. In the last policy, they had hiked the repo rate by 50 basis points. They had hiked the savings bank rate by 50 basis points. They introduced the marginal standing facility at a good 100 basis point premium over the repo rate. The tone was extremely hawkish. I think all of them are not going to be repeated. What we expect is a 25 basis point hike, but a pretty hawkish tone.
A hawkish tone, but how many do we get in terms of 2011? How far do they move up, the bank?
My own expectation is that after this hike, they'll be delivering one more in the next quarter. But after that, possibly they would have to get into some kind of a pause for a while, because if you see at the moment, the banks are really passing on the interest rate signals from RBI pretty fast, and the loan growth, etc., going ahead in the next few months can actually start suffering quite a bit, and growth has already started going down quite fast. So possibly another hike in the next quarter, and a bit of pause for a while after that.
Well, that's always the debate, isn't it? And the dilemma that these banks have of trading growth for inflation. How bad is inflation, though, for the Indian economy right now?
Well, in terms of the growth inflation dilemma, I would say the RBI has made its stance pretty clear that the inflation is clearly the enemy number one at this moment. But if you see the nature of the inflation, RBI may keep on hiking endlessly from here on. But a large part of the current inflation is still coming from supply sources, still coming from the imported sources. RBI hike does have very little influence on that part of the inflation. So the impact of RBI hike on the bulk of inflation is not really very sure. But the impact of RBI tightening on growth slowing down is a lot more surer. So that way, RBI would have to strike a balance going ahead. Having said that, I fully accept that at this level of inflation, they cannot think of a pause. But going down after today's hike and one more hike going down, possibly there is a case for a pause for a while.
Why not just get it out of the way? If you say there's going to be another rate hike in the next quarter, why don't we just get it done with now and really be proactive, if you will?
Well, I think the issue here is the rate at which the banks are passing on the RBI signal. If you see the last 6 odd months, the banks have raised the rates very aggressively. So at this moment, there is a possibility if RBI hikes only 25 basis points, banks may go slow. But if RBI actually hikes by 50 basis points, the interest rate signal passed on by the banks will be really, really aggressive. And that may be all of a sudden a big blow for the economy as such. I think RBI should prefer to go into some kind of a wait and watch mode with a 25 basis point hike and a hawkish tone.
Siddhartha Sanyal, just very quickly as well, what are your trading ideas on this?
Well, I think if you see in terms of the overnight interest swaps at this moment, the shorter end of the curve can still be paid. It's hovering off and on around 8% kind of a mark. There is a bit of, there is a clear case of liquidity tightening persisting for quite a while, as well as rate tightening continuing. So we think the shorter end can be paid, but sooner or later we'll like to actually go for receiving the longer end.
Siddhartha Sanyal, thank you very much indeed for joining us.